why Algorand could make instant payments the new global standard. Algorand isn't trying to make payments slightly faster. It could eliminate the very concept of waiting. For decades, we've accepted that paying someone across town takes seconds, but moving money across banks or across borders can still take days. Every coffee purchase, subscription payment, gaming transaction, and international transfer passes through a maze of intermediaries, clearing houses, and settlement systems built decades ago. But what if money moved as quickly as information? What if millions of tiny payments settled instantly with finality? Today, we're exploring why retail microtransactions remain one of traditional finance's biggest unsolved problems, and why Algorand and Ethereum may be building the infrastructure that changes everything. When you tap your debit or credit card at a checkout, it feels instant. But in reality, the payment has only been authorized. Behind the scenes, banks still have to clear and settle that payment. The merchant may wait 1 to 3 business days before receiving the money. During that time, multiple organizations verify balances, process fraud checks, reconcile accounts, and move funds between financial institutions. Consumers rarely notice this invisible infrastructure. Businesses deal with it every single day. Microtransactions create an entirely different challenge. Imagine charging 25 cents to read one premium article, or 5 cents to unlock an AI response, or 10 cents for an online game purchase. Traditional payment fees can consume a large percentage of these tiny transactions. The smaller the payment, the larger the percentage lost to processing costs. That makes entirely new business models impossible. Most banking infrastructure wasn't designed for today's digital economy. It was built decades ago. Banks still perform reconciliation in batches. They must monitor fraud, verify compliance, screen for money laundering, manage settlement risk. Every additional safeguard improves security, but adds more time. When international payments are involved, correspondent banks introduce even more complexity. Suddenly, a simple payment becomes a multi-day process. This is where Algorand takes a fundamentally different approach. Instead of waiting for banks to reconcile balances, transactions settle directly on-chain. Algorand's pure proof-of-stake consensus allows payments to reach deterministic finality within seconds. Once confirmed, the transaction is final. No competing chain, no waiting for multiple confirmations, no uncertainty. Combined with transaction fees measured in fractions of a cent, Algorand becomes particularly attractive for retail micropayments. Businesses gain immediate access to funds. Consumers receive instant settlement, and payments become available 24 hours a day, 7 days a week. Ethereum approaches the challenge differently. Rather than focusing exclusively on Layer 1 speed, Ethereum increasingly relies on Layer 2 networks. These networks process thousands of transactions before securely settling onto Ethereum itself. This dramatically lowers fees while increasing throughput. Ethereum also benefits from the largest decentralized finance ecosystem, stablecoin market, and developer community in blockchain. Its strength lies in flexibility and network effects. Algorand focuses on simplicity, deterministic settlement, and enterprise efficiency. Ethereum focuses on ecosystem scale. Both are solving the same problem, using different strategies. Imagine paying 1 cent to read an article, 2 cents to stream a song, 5 cents for an AI request, machines paying other machines, electric vehicles paying charging stations automatically, IoT devices purchasing bandwidth, gaming rewards distributed instantly, content creators earning revenue every second their content is watched. These ideas have existed for years. What has been missing is payment infrastructure capable of supporting billions of tiny transactions economically. Blockchain may finally provide that infrastructure. Instant settlement alone won't transform finance. Governments still require compliance. Businesses need consumer protection. Stablecoins must achieve wider adoption. Wallets need to become easier to use. Banks must integrate with blockchain infrastructure. The technology is advancing rapidly, But widespread adoption depends on regulation, education, and trust. For decades, payments have relied on systems built for another era. Today, blockchain is challenging those assumptions. Algorand demonstrates how deterministic finality and low-cost transactions could power a future where even the smallest payment settles in seconds. Ethereum shows how a massive decentralized ecosystem can scale through layer 2 innovation while maintaining global security. Whether one platform ultimately dominates or both serve different markets, one thing is becoming increasingly clear. The future of finance won't be measured in business days. It will be measured in seconds. And the race to build that future has already begun.